This is Carl from Kansas with your weekly livestock update for Friday, March 14th. It started out the week a little bit quiet, and then Tuesday we got the WASD numbers. Bottom line, beef production in the United States was ratcheted up 120 million pounds to 26.7 million. Pork production was cut 110 million pounds, coming in at 28.4 million for the year. The higher weights on cattle, and also we're starting to see a little bit. We saw a little heavier placements. Imports of feeder cattle had picked up out of Canada, quite a bit. We're up about 40,000 head of feeder cattle on the year, and almost same on hogs from what we had last year coming across that border. A lot of them feeders and fat cattle as well. But the Mexican imports 110,000 head a year resumed, and it looks like we were putting on heavier weights in the United States. And I'll touch on that in a second here, but the heavier weights did add to the beef production forecast that we've had here. Uh, Weekly movement, we did see heavier movement of cattle and hogs on the week. Movement was up 1.6% from the week before, adding to the beef production. Hog movement was up 4%. That's not too surprising. Last week we had these blizzards that moved through the Midwest Tuesday, Wednesday, Thursday, really into Friday, shut down pretty much everything in that northern Iowa, southern Minnesota market. Two things. It did cause a little bit tighter inventory at the packers, so packers had to push a little bit this week, and the feeders had to push a little bit as well to get some feeder cattle to move. So a lot of pushing on both sides, but here's the thing that I picked up on, and I have been talking about this. You're probably all sick of it, but the heavyweights on cattle, we've started to see these turn a little bit. Feeder cattle or fat cattle still are running well above last year, but we were up to the upper 40s to 50 pounds per head heavier than last year. We're starting to see them back off. Now we're still up about 35 to 40 pounds from last year on most reports, but we're backing off. Tells us that the feedlots are starting to get a little bit more current. We're probably going to see a little bit more push for feeder cattle, especially with the corn market backing off its highs. It's going to give us a little bit more support there. So I expect to see a little heavier placements, and this is verified by the weekly auctions we had. Feeders 10 to 15 higher for the most part. Real fancy feeders going up about 20 higher. Stocker cattle. We saw a big push for stocker cattle this week. Looks like there's going to be a lot of grazing interest taking place out west. So we did see a push there. Cattle, we continue to see this back and forth, and it's almost impossible to predict what's taking place. We made corrections and then we rally back, and the funds really haven't bought that much, but we are still overbought. We're overextended. You can make the case we're overvalued. A lot of concern coming at cattle right now from the consumer confidence report. Consumer confidence came in well below expectations, and looking forward is downright concerning when it comes to consumer confidence. Some economists have came out and said that they feel that's a little overdone, and the old adage is, you're so low you can't go any lower. Low prices cure low prices, low sentiment cures low sentiment. That's how they're looking at it. I don't think if you see sentiment fall apart in 1 month that it comes back real quickly, but it could. So a little bit of a silver lining coming to the market there. Hogs had a big story come out at the end of the week here that was published at the end of the week. It's kind of been known by trade, so to speak, but really just got published. And this is the United States' export registrations it's had with China on its packing plants. These were all established in the phase one trade agreement. All these packing houses in the United States were granted access to the Chinese market. a lot of those registrations have expired. That was, we're talking 10 years ago on close to it on these. So a lot of those have expired. Hundreds of them expired. Hundreds of them have already been extended, though. Add to that, even though the registrations expired, China did not slow down buying pork from them packers at all. They've stood right in there. So it really, I have a feeling if we had not saw the escalation in the trade war, we wouldn't even be talking about these registrations right now. Yes, we've known about them, but we continued to see export demand, so it wasn't really a big deal. Now that we're, in another phase two or whatever you want to call it of another trade war with China, we could see these used against us. I think it would be more because of China trying to regulate their domestic pork inventory rather than, to really retaliate against the United States. Consumer demand isn't that great in China. We've seen them cut back on their corn imports, their soybean imports, all their other imports. To see them cut back on pork wouldn't be a surprise. All in all, that was the week's trade. Like I said, the news we had some big stories, but not a lot of them for the week. Check back next week. We'll have an update for you. Until then, thank you for your time.